Hello, everyone. Welcome back to the RationalInvestor.com's daily brief. Happy Friday, TGIF. Investor. Although I suppose if you're a risk taker buying risk assets in the market today, you're probably not overly happy. The price movements themselves aren't really that big, other than maybe the gold market. But it does feel as though the air is coming out of the bubble a little bit here now. And seasonally, that's pretty much what we should expect to happen. So anyway, we'll take a few minutes and run through some of the stuff that I saw hit the wires here today. News, econs. We take a quick boo at price action. It's interesting that Algo's finally fired bull. And interestingly enough, I have one plan that I'm running this particular year is just purely trading the signals. And man, I spent probably an hour or two last night fighting with the ledgers and stuff to get money onto exchanges to buy products. Got to give a shout out to site members. If anything, fantastic sort of testament to our PMA for the win. We have some really positive people on the site, and they were all like, "Hey, Brian, I'll help. What can I do to help?" Actually, one gentleman in particular, Mr. Zugi, actually Chris's buddy. If I didn't have Zugi, if I didn't have Zugi in my life, I probably wouldn't have gotten that trade off last night, and I wouldn't have Chris as my show director. So way to go, Zug. That guy's got PMA coming out the butt.
Duke's the man.
Yeah. So action-packed day, and like I said, if you're a gold bug, you're probably a little bit verklempt, but gold sure has been moving up a heck of a lot. Where the heck are we going to start the adventure? There's just quick boo at the dashboard. We are starting to get up into nosebleedy territories. If anything, once again, probably a really good testament that if the teal is sloping higher and you get a bearish cross from the moving average, it's probably like a weak signal. And then we quickly got a cross back over to the bull side yesterday from the S&P 500 breadth. And teal is still sloping up, and materially so, but we might get another cross back to the downside with today's price action. And we do get a lot of these sort of back and forth until a new trend is established, and then we just sort of carry on for a few weeks. Crypto is kind of the same thing, only in reverse. There's a bit sort of head scratching here. I was a little surprised that the algo didn't turn back up. We had a really odd situation where the algo actually went different directions there a week or so ago. And that probably would have been the better signal, but nonetheless, we did get a cross over last night when the engine updated. Of course, the engine updates right at just about the time I wanted to go to bed. And then, like I said, fighting with getting crypto onto exchanges, because we don't want to keep crypto on exchanges. We want to move it off as fast as possible. Certainly, especially if you're dealing with sites like Binance and stuff. If anything, I was pleased that I put the open order in at the level that the signal was generated off of. And then when I came back a few hours later, I noticed that price had backed off. I mean, it took off initially and then backed off back to the entry price, and we got our fill at the correct level. But now, of course, the whole market's coming off. It's not an egregious amount. I think the Bitcoin's off like maybe $100-200 or something like that from the top. $200 right now. So, but it is interesting that the algo got us to go along there, and terrible trade location, absolutely horrible. So I don't know whether I'm really impressed with the algo's actual price points that it's picking to enter and exit trades, but that's the whole point of sort of building out these algos, is you got to sort of run them in real time and see what the signals generate, and then go back to the drawing board. Don't really like that. Don't really like this. So I don't really like people on the site, especially since we've just sort of got this thing up and running. I don't want you just going and blindly taking the trades based off of these signals. Everything that, speaking specifically to site members, everything that you see here should just specifically align with your teaching, trade setups, for proper risk management, 3 reasons for a trade. If you want to use the algo as a sort of complementary reason, I don't think that's a bad idea. And I suppose, if you look at the Bitcoin chart, you might say, well, there is this bullish bot, and if we are as bullish as we are, I'd try and sneak in off this 30,300 level area kind of idea. Now, if we get a nice little bottom in here, at least you'll have the algo on your side. Anyway, live by the sword, die by the sword. Like I said, probably the guys that are taking the biggest punch in the nose today are any of the gold bugs. And it also looks to me, I'm not quite sure, somebody on the site said that there was a key reversal happening in the US dollar. And maybe they need to go back and retake the level 1 program because there is no key reversal there. So I was a little disappointed to see that comment in the lounge, but nonetheless, maybe somebody can reach out to that person and help them understand what a key reversal is. Let's see. Weekly chart on the US dollar index. It's kind of fluffy. We had a key low there of 182, and we made a low here just the other day, 178.8. So we are technically making lower highs and lower lows. It'd be interesting to see whether this is going to form any kind of divergence down here. I think a lot of people in the market had kind of hoped, maybe to a certain degree, that the US Federal Reserve would be done their interest rate raising program. I don't know. I've shown you a bunch of money cycle studies over the months. I don't think that the interest rate raising cycle is quite over yet. And that next FOMC meeting actually is not for, geez, what is that? That's almost like 3 weeks, 2nd of May. So we might find that price is just all over the map here with regard to these currencies. I do see a little bit of a div coming in on the MACD here. It's not egregious. Willie is stupidly oversold, so being a seller of US dollars here is probably not a good idea. And then conversely, don't really ever, and this is probably a note just for your reference, when in prop firm trading days, brokering days, you'd never trade the US dollar index. You'd take your cues off of the index, but what you would be trading is like the euro or the British pound or, Canadian dollar or Swiss franc or yen. And take your pick. They're all down today. So clearly a nice up day in the US dollar. I get the impression that this is more almost kind of like a dead cat bounce. Market was threatening to break down to new lows, and interestingly enough, we had a couple of econs that came out today. They're kind of mixed bag, and I think that's probably a good description of the econs of late. You got some hawkish, some dovish, a little, like I said, a mixed bag. So the headline number here, retail sales, and of course, any fans of Mr. Druckenmiller, you probably remember his comments about retail sales. This is probably the best, considering that the United States economy, and this, of course, is assuming that the economy is what it classically has been. With Klaus's great reset and substitute drama teachers trying to basically instill communism here in North America and taking their cues from Winnie the Pooh and all that shit. I mean, maybe the fabric of our society is changing. I find it hard to believe, but maybe, who knows? But, classically, if it's a consumer-driven economy, then retail sales is hugely important because it basically is the tell of what the consumer is doing. And retail sales, as we had said, the banksters just went and fucked everything right up through this whole sickness and let it get out of control. And I think that was the probably the main criticism, is that they almost acted irresponsible, or they have some great sort of plan, Rothschilds and all that crap take over the world economy. And this was intentional. There were fairly influential American citizens. Mr. Druckenmiller, like I said, I'm a big fan of, who are kind of like, what the hell are you doing? And I think after he started to get pretty upset, I think that, Jerry, no offense, but, in comparison to Mr. Druckenmiller, I think Jerry's just an amateur. And I think Jerry got a very clear message from those people that get your act together. And so that's kind of why you see Jerry acting the way that he is now. We're not going to stop on this inflation thing until inflation is absolutely dead. But the issue here, of course, is that with the raising of interest rates here like this, they're probably going to absolutely kill the consumer. So I don't think that the market really liked seeing that retail sales were down 1% previous quarter. Hasn't really broken down per se. If anything, this almost looks like a megaphone, which means we probably should see some really negative print here. And that's probably on some sort of peak in commodity prices heading into this seasonal peak in commodity prices, buy around lead of the middle of February, sell the middle of May, made money none of the past 10 years, blah, blah, blah. And, the headline is that, the consumer's feeling the crunch. You're feeling it in the pocketbook. I mean, I know personally, I used to actually like going out and having dinner out. I don't go out anymore because I went out and had a burger with, just an absolute piece of shit burger too. You look at the presentation on the plate, it's just garbage. And it's like the bill came 2 burgers and a couple cups of coffee. Bill came to $50. So it's like, I'm not going to go waste my money at a stupid 5 and dime restaurant and throw my money away. So I would imagine there's probably a lot of consumers that are like, it's just not worth it. And if this is a consumer-based economy, those are bad trends to start setting precedents for. This will snowball on itself. So that's sort of the negative side. The positive side is consumer sentiment is still relatively positive, ironically enough. Their consumers are relatively positive, but they're just not spending their money. Consumer sentiment index came out, and interestingly enough, this has not broken. And the irony of it all, of course, we've talked about this at length. I did find it interesting that BlackRock is starting to feel the pinch of, basically becoming a monopoly player in the housing industry. And, them jacking up rents on the poor consumers. It's starting to bite them in the butt, but I think they're still making tons of money. But I think you can make the argument that the Fed needs for this to actually top out. Now, the irony of it all is if and when this does actually am out and start breaking down, does that actually make retail sales go super negative? I don't know. This decade is just a shit show. And actually, it's interesting because today in the after party, we have on our celestial guru, Cole, who's going to come and do a fun presentation. It's always fun to check in with Cole and see what's on the docket. And of course, Cole has been warning us that the latter part of 2020s is just it's a nightmare. So if anything, we have this little window where we got to get through some crap here coming up shortly. And actually, he's going to talk to us today about solar eclipses and some aspects that are coming in here that could make things a little challenging here over the near term. But hopefully we're building some sort of base through the fall and probably 2025 or 2024, 2025 positive environment. If anything, if you're watching this for the first time, I can't stress enough how incredibly valuable this free blog is that we publish, and Josh, our marketing guru, did a recent blog post on a whole bunch of reasons why we think the market is basing here in 23. I could see several parts of the world economy do very, very badly. I did find it really interesting that things like Canadian banks are now the most heavily shorted banks around the world. And I've always said that I think Canada itself is a short here. And not necessarily because prices fall, but because price inflation is so bad. The purchasing power here locally is just hard. It's a train wreck. So you either have a trade-off. You either let asset prices fall, which would be a short, and the short makes money being short. Or the government comes in and just does endless bailouts, endless money printing. Substitute drama teachers don't know what the hell they're doing, but their solution is, hey, just turn the printing press on and we'll create new government jobs and government funded programs that just don't do anything. They just push paper around. That's not an environment that you're going to make great investment returns on. And it leads to hyperinflation. I mean, look what happened in Venezuela. Look what happened in Brazil in the 1980s. Number of different countries down there in Central and South America through the 80s. Look what happened to Zimbabwe. It's the same thing. So anyway, so this is 2020. It's going to be a bit of a tough challenge, that's for sure. And I think what we're going to get here is you're going to get this kind of mixed bag where the economy's okay, but the inflationary pressures are still really strong. And they've got to keep raising interest rates. I mean, there's lots of headlines out this morning. Where are we here? Top Fed officials. I mean, geez, this guy, he looks way too young for him to be solid white hair. What the hell's going on in this world? Anyway, I guess maybe they're sort of acclimatizing themselves to the Anunnaki. Sees need for more interest rate increases. And I gotta say, until you actually break these bastards and get them out of the market and back to sort of just being, if anything, this almost reminds me of the Michael Berry and the Big Short and all that, where he actually suspended his funds redemptions because the market just wasn't moving in his direction. I've heard lots of talk that BlackRock is just saying, nope, sorry, you can't withdraw your money. Yeah, I know we're getting killed and your funds are down big time, but read the fine print. If we don't want to let you out, you can't do anything about it. So let's see. I mean, it would be interesting if this was the reason why we actually had a major correction this fall in the market, that they sort of these darlings that everybody has fallen in love with actually start falling apart here because they're just way too heavily leveraged. Anyway, we'll see how it goes. So the point matter is that I don't think we're done the rate increasing cycle. I think, the market really wants to anticipate that we're done the rate increasing cycle. And so you had things like the US dollar index coming off and dumping. I suppose, any good technician would have looked at this low and said, well, that's a V bottom anyway. It's going to have to be tested. Now, the fact that we've gone and tested the low, actually broke to a new low, means we're probably going to have to test this low again at some point down the future. And actually, this might be, mind you, it's just a hair lower. But this would probably be an interesting conversation for David, our stock picker club quarterback. Is this an atom right here? And I guess in our case, we might even call that like a Steve. Wouldn't quite be an Eve. An Eve, of course, Eve has a nice, very well-rounded bottom. J-Lo booty bottoms, we used to call them. But Steve's, of course, packing a little heat in his package there. So, but anyway, if that's the case, then we probably should see this come back, rally up into sort of this neckline level here, and probably into things like 30 SMAs against this trend line resistance, then come back down And then if we do actually turn up through here, then it means that the Fed is still very aggressive on raising rates and they haven't solved the inflation problem yet. I will say that there was a data point that came out yesterday from the producer price index perspective that was relatively benign. So it's like I said, I think probably the message of the day is this is a mixed bag kind of market. I think here, if we go, let's go, I think it was just even yesterday, wasn't it? It was a PPI. And so PPI came in down quite a bit. So interestingly enough, I would make the argument that the Fed has done its job and it's done exactly what the short-term interest rates do, in that they're killing industry. Way to go, Fed, you're killing industry. Of course, you see what the banking industry, you see how they're reeling. And they're killing the consumer. You see retail sales. The only problem is how do you kill the monopolies? Because these are the cocksuckers that are sort of injecting a whole bunch of artificial inflation into the equation because they're buying up all the damn housing. And they're, cranking rates. They're trying to squeeze as much out of the Joe Sixpack as possible. So this, these guys are the problem. And I don't even know if they can. But they are killing the consumer and they are killing industry. So way to go, Fed. Again, it's a mixed bag. And historically, probably the Fed's job would have been done if it was just a case of we got to control commodity prices and we got to control the consumer and the worker and their wages and jobs and all that kind of stuff. But they got to deal with these jerks that are, and the Klauses of the world that are basically acting like monopolies and artificially jacking, housing. Housing historically was a sort of a sacred cow after the Great Depression, which you weren't allowed to screw with the prices of people's homes. And I've often said that the end result of this is we might just actually have to go back to living in Hoovervilles. So if you don't know what a Hooverville is, and do some research. Let's hope not. So mixed bag. That's probably the sentiment. And of course, the problem here too is if we just go and look at things like the stock market, I mean, you can make the argument that number one, we've had a very respectable seasonal rally. So you can't say there wasn't money to be made on the long side of the market. And Lord knows, God, you go around TRI, there's a couple kids in TRI that just making ridiculous money on the altcoins, banging out doubles right, left, and center. So you can't make the argument there wasn't money to be made here. But I think you can make the argument that this was a pretty, typical seasonal rally. And we have been brought up into very normal technical levels where tops usually come in. And relatively high, I guess. It would make sense that we might not break down. I know there are some people on the site that are calling for recession. I've said repeatedly, number one, usually recessions happen in years that end in like 8s, 9s, 0s, 1s, and 2s. Those windows. And I think, because of the sickness, everything was put off. The recession was supposed to happen in 2000, 2001, or excuse me, 2020, 2021. And then, of course, they all freaked out over the sickness, or maybe it was all staged, right, and all that. But I think Cole, he has a colorful name for the sickness.
Scandemic.
Yeah, if we repeat it on YouTube, we get banned though, so we're not allowed to say it publicly.
Oops.
Fuck on water. You could say anything you want on my video stream. So I mean, you put it together, just look at this chart. So reload zones is everything that we teach you. Brian's favorite fib. I mean, it shouldn't surprise into a bit of resistance. One market that is this This weekly chart is very bullish. There's no doubt about it. It's going to be tough to break this thing. And, in this inflationary environment, this is the whole damn reason why Bitcoin was built. We've had a very powerful surge here coming out of 3 bars of sort of consolidation. So as I've been posting on the site recently, that's a ton of energy. And they even, in this 3 weeks of consolidation, there was even, a fairly respected, I'll use that word lightly, but influencer within the space that tried to get everybody to think that one of the major players was about to, get subpoenaed by the US government or whatever. People potentially freaked out, and then, oh no, it was a big head fake. And of course, those guys all sitting there chuckling on the sidelines to themselves about what a great job they did screwing people over and stuff. So that's the kind of energy that I'm talking about. You can have bull energy. Probably the daily chart, something like this, right? That W right there led the sort of the ground for a big pop here. So, heck, we don't even really have 3 lows to justify this bot coming in yet. What should probably happen is if this is actually a bottom, right? We do something like, 3 higher lows to justify going. And that in this crazy game. Well, you might find that this actually just turns into some crazy head and shoulders pattern, and those 3 higher lows just never come in. So we'll see how this plays out. Yeah. Yep. Okay. Well, I'm just blabbing away here. Does that sound any better? Yeah, we're coming into the end of this, eh? So just the point being that this bot from the Ides of March going long there at about 25 and change. Move stop to break even at 50, move stop to trailing at 66. That's the way. It turns out it was sort of social media influencers playing around, no real new fundamental drivers. Then interesting, right after top here. I find it interesting that on that move up top last night, we did have that level hit. Was that a lot of these kind of people exiting the market now? Could be. And I did find it fascinating. I'm not quite sure why the algo is acting the way that it said. I don't think it's a good idea, especially if you're relatively new to this game, just to blindly go and just buy and sell algo signals, because you just don't know what you're in for. I have worked with algos in the past, and sometimes they get you to do the screwiest things. So anyway, point of the matter here is I did take this signal here last night, and as you can see, it's not doing very well right now, is it? So yeah, it's at $250. So in crypto terms, it's not really that big of a percentage move, but nonetheless, kind of bummed to see that she kind of floundered there. Interesting to see the total market cap is rolling over, but dominance is also rolling over. Did notice Ethereum, of course, did have its big Shanghai event. Yeah, I see a notice on YouTube. It says the audio stream's current bit rate. Oh, I think probably what I have to do is, you think it's a computer or do you think it's OBS? Hmm. All right, so maybe I do need to reboot here. We'll do that, and I do notice that this Discord does use a lot of resources, so that could be it. But all right, and if anything, if you guys did watch that video that we did on Wednesday, bit of a tough week for the old man this week, computer wise, eh? Fighting with the computers last night to try and get this order working, you know, for whatever it was worth. Fighting with and you got to hand it to Joe. He's a really nice young man, eh? I think he's a gentleman, and I think he generally tried as hard as he could. So we'll get that licked, and now Brian's fighting with YouTube here this morning. So go figure. Anyway, so just to wind this up then, short and sweet. A little surprised that the algo finally decided to go bull way up top here. I don't know whether I would actually consider that like, you know, manual. In fact, I did this last time we had an algo signal. I compared manual signals to the algo signals. Actually, they were pretty similar last go round. I wouldn't even really say I have a manual trade set up here. I will say that it does look to me like yeah, third, what does that say? 31.59, and we got up to 31.35. And this low was 29.689, 29.6. Nope, that's wrong. Okay, let's make sure we have this correct here. 690. That would be a buck above. Anyway, I think you get the idea. So we'll just put that right there. 89. There we go. You know, if what I would like to see, and of course the algo is long, so I would like to see this. But can we please get a nice little W that comes in here through the weekend so we can set up a base to rock and roll higher? If I can see something along these lines, then I'll think, okay, we've got some confidence in looking for that move. I don't know necessarily about this, but we'll see how it goes. And of course, if the algo rolls over back negative, then I will just close the position out. And it's just the way that it is. So, fun in the altcoin land, and it is 9:36. So we've basically done about a half an hour here. I'll just wind up with just a note here. Actually, it was interesting, you know, last night and first thing this morning, did notice quite a bit of green in this space, but it does look like we've rolled over a bit. I'm seeing a bit more red now. I was pleased to see we went and picked up little names like this Ocean here, kind of hoping to front run the bot. So it's nice to see that the bot level actually did fire here, that 25. So I'm feeling pretty good about that. I like these kind of names. This AI narrative, I think, if there's going to be a rally in crypto here, I think this AI narrative is probably what's going to lead the charge. And of course, we've got Ethereum trying to lead as well after the upgrade. So we'll be keeping a close eye on how that works. And of course, I thought this was funny the other day. Probably a perfect analogy of this market. Has the Viagra finally worn off? So interesting. This is a really pretty head and shoulders top up here, although it's not really textbook head and shoulders. But a nice fractal nonetheless. Price coming off here a bit. If anything, if you miss this guy in the initial run up and you're like, I'd love to have some of that on the books, this is probably a really good analogy of what we would do is just simply draw your reload zones. We will go RLZs. There you go. And what a surprise. We all know this, of course, as your BFF or Brian's favorite fib. Lines up really nicely with the previous market structure breakouts, right? So there's your Brian's favorite fib. There's nice daily double bottom. This is a weekly double bottom. I don't know whether you can throw stink bids in on these kind of names like this, but keep your eyes peeled, maybe set alerts and that kind of stuff. If you do get a stab back down in there, I think it makes a fantastic reload, and I will be doing that if that event happens. So I would even say over the next month or two, this should be a really good opportunity that if we do get some weakness in the market, then you can reload on a lot of names that maybe you banged out some doubles on. So, oh geez, this is one I wanted to try and sneak in on, but it looks like, same sort of thing. We can get a kind of W's to start forming in here. And that's actually kind of like the Bitcoin chart. I think I might go and participate there. So there are some interesting areas to keep your eyes peeled on in the altcoin space. And of course, if I understand correctly, I think also Trex is finally killing all its native North American client base and moving overseas. And we were posting some just outlandish price action you saw over on that exchange. So be forewarned if you do play in that space. There is some funny business going on with that place. All right, I think I'm done with the public rant for today. Like I said, Econs and sort of what explains what's going on in the marketplace, just kind of a mixed bag. Some good news, some bad news. I think you're probably having like a dead cat bounce scenario here on the US dollar. After an oversold condition, you'd be kind of dumb to sell US dollars down in here. And on balance, I think maybe risk just got a little ahead of itself. And interestingly enough, to see the gold market also coming off smartly as well. So maybe people got a little bit risk-takey in the gold market, thinking the gold was now a risk-on asset. Tough to say. Okay, we're going to head on over, have a nice conversation with Cole here today and talk celestial events. So by all means. Oh, okay. So somebody's over there on YouTube saying Mercury retrograde. If anything, that's perfect, Cole. Maybe you can comment on that in the after party. That would make perfect sense why I'm fighting with these computers so much right now. But, PMA for the win, slow and steady wins the race. Don't take no wooden nickels, and we'll see everybody in the after party shortly. Have yourselves a great day. PMA for the win. All the best. And bye for now.